So, it's the Canadian has just been a mind puzzle to me because it should have performed better. Well, it's starting to perform better, but oil prices have collapsed. Canadian oil is basically changing hands, from what I understand, about $6 a barrel because of transport issues. So it's a commodity play, and you see what still goes on with Aussie and Kiwi. It's going to take a while for this all to sort through the system. So, again, I don't have any really good location here, so I'm just leaving it alone for the moment. It's up, it's down, it's up, it's down. Where the rally comes from, it may be bank intervention. I mean, there's so much central bank action going on now. You're seeing it. Look at the yield curves in the U.S. on a day-to-day basis. I love to play with these, but I'm standing back right now until I can get a greater sense of what's really going on here. The European, I'm calling because I know there's questions about Europe. So let's get to those because, again, I can go to 10:30 and after that I'm done.
Okay. Angelo, have at it. All right. He's disappeared. His question on Europe, we were talking about the Dutch and the Germans basically saying niet to the Italians. And his question was, are there people in those governments that basically want Italy to leave on their own?
Well, yes, there have been. Yes, it exists. But it's, again, as I've cautioned, everybody's in too deep. Okay? Good idea. Now, Germany, again, people have woken up to the fact that it is the German credit card. I can't say how many years I've been trying to explain this to people, but because it doesn't happen, it doesn't exist. It's the proverbial tree that falls in the forest. And I understand that because, again, if you're early in this business, you're wrong. So I get it, but it's something that we've had to watch. It's coming to crunch time only because Lagarde, being the type of person she is, as she said, she's an owl, she's not a dove or hawk. She wants to call the question, and she's dead right to call the question. Because here you are in the middle of a crisis, and if the EU cannot respond to this as a unified institution, let me use that phrase, then what the sense are we even talking about? Then kill the whole project, get rid of the damn euro, and let's put an end to this. Because you can't make a damn decision. If you can't consolidate this physically by doing what's needed, you have no chance. And that comes from a euro bond. So she knows, she's pushing for it because she knows that's what's needed. And even the Irish came out today. So there is the momentum building because you got to be an idiot. Really, you got to be an idiot not to see where this goes. Okay? There's no more, maybe it's too deep. Draghi built that damn balance sheet. And if she really wanted to call the question, Lagarde, she'll just say, okay, I'm just creating a euro bond. I have all these sovereign debts. It's now called a euro bond. I've consolidated into one instrument. And you'll say, well, you're breaking the law. It's peg war. There are no more rules. You can pretend that there's rules, but the Fed just suspended all the rules that they were hiding under. Not all, because they're not buying stocks yet. Not yet. But tell me who's abiding by what rules? What rules? Nobody's playing by any rules because it's a crisis. It's an emergency. We're going to do whatever the hell we want to do because that's what crises and emergencies get. Okay? We're there. So Europe needs to stop pretending. And they've got to stop pretending quickly because the politics are not good in these individual countries. So you must, I hate to use the phrase, seize the day. You must. Otherwise, end the European project. But here's what I caution. Go back to July of 2012 when Draghi made his famous whatever it takes. Why did he say whatever it takes? Because borrowing rates in Italy, Spain, what was nastily called the pigs, Portugal, Italy, Ireland, Greece, and Spain, rates had zoomed up. Forget where they went to in Greece. But they were at 7%, 7.5%. Now, if you were to, hint at pulling the plug, rates will go back there, maybe higher. Because who stands? You're going to want to buy Italian debt backed by Italian lira? No, you got to be out of your mind because you don't know what your risk is. So, not in the short term anyway. And look at it. We know what happened in Greece. Greece 10-year debt went to 40%, but now it's at 1.5%. So when there's a sense of the integrity of the system and that somebody stands behind it, you can do this. But because so many sovereign wealth funds, the Japanese, probably the Chinese, have bought into the European bond market and throw on all the European banks, okay? Because under the rules of the Bank for International Settlements, sovereign debt carries a zero risk weighting. So the Italian banks are loaded up to their eyeballs in Italian debt, as well as other banks, the French banks. They're all loaded to the gills. You pull the plug on this, you will have a deflationary spiral that will collapse the global financial system. And I am not overstating my case. That's reality. If you think otherwise, push back at me and tell me what you think will happen. Tell me what will happen. But the end result will be a collapse in the global financial system because the amount of debt out there is so big. It's so big that the immediate effects will be disastrous. Nobody will do any lending. And that's because it's on here. And Lagarde knows exactly what she's talking about. It ain't making the headlines, but I guarantee you she's pushing at certain people. You understand where we're at right now and the fragility of the system. That's the reality of it.
All right, so I got a question on the on how that plays out in the currencies. Well, let's say that all blows up.
Okay.
Is the euro become the Deutschmark, or do they go back to the Deutschmark and the euro gets sold because it ceases to exist?
Nobody knows. Okay, for 6, 7, 8 years ago, guys like Bernard Connolly and others hypothetically throughout the question let the Germans leave. But then they could do it. But not with this balance sheet that Draghi built up. There's $3 trillion. Who knows what else is on there? And they've already had some bad in the corporate bond sector. They own that one mattress company that they took a loss on. Of course, what's the difference? But nobody knows the answer to that question. Because again, if you go back to my blog readings, I would ask this question back in 2013 and 14 when this was being discussed fairly deeply to understand it. Whose euro is it? Okay? So let's entertain that question. If it's Italy, Spain, France, because France is saddled in with this as much as they want. France is really the interesting party here. But if it's all of those nations, let's say the 9 who wrote that piece or who wrote that letter last week about that they wanted the Corona bond, let's say it's their euro. The euro will drop like a stone because and then the Dutch and the Germans go with the Deutschmark. Okay? Probably what you really want to be is long British pounds and short euro because it gets lost in the conversation. But right now the Brits are looking pretty intelligent, I think, because they have flexibility here. Nobody else has flexibility. They're locked into this. They've got to make a decision soon. But I would probably go that route, as much as the Brits would hate it. But if you were looking to play, and we see the Swiss. Where's the Euro Swiss right now? It sits here because again, the Swiss National Bank is in. How big? We don't know. We won't know until after the fact. I can't answer the currency question because it all depends which way they go. And it's not the balance sheet is just so big. Again, you tell me. I want somebody. I want Ben Bernanke. I want all these asshole economists that they drag out on CNBC to tell me what the outcome is going to be. Because if you don't think it's going to be a massive debt default, which leads to a collapse of the global financial system, then tell me how it plays out. I know I know Jerome Powell told me in 2016 that it's not to worry because they have a printing press. Well, really, no, they don't. If they're not they in a sense have a printing press, but they don't have a printing press like the Fed. So you tell me, and I await the answers.
Well,
Go ahead, bring me any.
They're throwing out numbers like $7 trillion. You know, I mean.
Okay, bring me any economist you want. Bring me Larry Summers. Bring me all of them. And I'm going to ask them this question and give me the answer. Give me the answer. If you don't wind up with a massive financial debt default because of the size of the European balance sheet, and that's not even counting the Target 2 money that the Bundesbank is on the hook for a shitload for. They've walked down this path. You cannot be half pregnant. And that's what they're pretending to be. I'm half pregnant. Well, you know what? It's time to give birth to the baby. If the baby is not a Eurobond, bye-bye. Bye-bye. You can't. This is like you want to be my friend in good times, but now the bad times are here, which you knew were coming, and now you want to pretend that you don't know me. Good luck with that. Good luck with that. Go on Oprah and plead for, really, the point is here, and you can tell by how many articles. Ambrose Evans-Pritchard's piece, you should reprint that every day because he's got it right. And they want to walk away. There's no walking away. This is, again, Bronx sales. Now you can't leave.
That was a great piece.
So I just don't know. Tell me how I hear all these people suggest it, but I want to know how they get out of this. Tell me how they get out of it. There's a lot of intelligent people pushing for this, but tell me how you get out of it. Tell me where the exit strategy is. Because Lord knows, I don't know. I don't get it. How do you think you escape from this? And this is what he did.
Well,
this is what he did. This is the danger of what Draghi did. And you know what? Don't tell me about Merkel. Somebody wrote a guy Chazen wrote a piece of how greatness of Merkel. And stop it. She sat there and made no decision. And you know what? There's no such thing as no decision. That balance sheet grew and grew and grew and grew, and everybody watched it. Why? Because the equity markets were going up, bond prices were being contained and controlled, so nobody cared. Nobody cared.
Yeah, well, it's going to get ugly, really ugly.
Oh, it could get, and I'll tell you what, to me, that's far more dangerous than anything that's going on in the United States right now. Because they have to make a decision. And you know what? Smarter minds are pushing them.
Well, they've already done some stupid things. I mean, every time you read the FT or Bloomberg, you know, they refused health aid to Italy, but they gave it to Iran. I mean, crazy. You know, I've got people in the room that, have told me they've been followed home already. And you really have to be aware of who's around you right now. It's going to get a lot scarier than it is.
Well, yeah. And again, it's nothing we haven't discussed here for a few years already. It's all because of the debt. It's not the corona. That was just the match that lit the fire. That lit the fire to the pile of tinder called massive debt. And nobody cared about it. This is so classic Hyman Minsky, and it's my frustration. So I'm not writing because I don't want this frustration. I have to think my way clear through this, although there is no clear thought. You know, I'm amazed that the metals have not just soared to the sky, but I understand the technical pictures and a few other things going on with that, and the market had to relieve its bullishness. I understand all of that. But if you can tell me an asset class that's worth owning in this world right now, please, I'll heed all your advice. Because I'll tell you what, I am not buying a sovereign bond of anything beyond probably a year of duration now. Because what's the sense of it? They've already told me. if you are a saver, if you have money in the bank, if you have money in your account, they told you that in their mind, it's trash, easily to be destroyed in an effort to bail out the financial, to bail out all the debt in the system. That's what they told you. Now, how long this takes to play out, can't tell you. You know what? I wish it was over tomorrow. I wish it was over tomorrow. I pray that it's over tomorrow. But it doesn't appear that that's going to be the case. So now with all this, now, after I get beyond my humanity and I have to go back to making a living, now I have to look at what the repercussions of this is going to be going forward. And how do I play it?
How ugly do you think the unemployment figures are going to be on Friday?
It doesn't matter.
Okay.
It doesn't matter because when I look at the economic data that just came out, I go, who are they talking to and what are they measuring? Wait a minute. You just had jobless claims jump up to what, 3 million? Who knows what it's going to be tomorrow? But now usually, the most important piece of the unemployment puzzle for me is the average hourly earnings.
Nobody's working.
Well, it's not even that nobody's working. I talked to yesterday. I met only 4 people showed up. Usually we have 10, and we sat 10 feet apart. But one of the guys is a Kansas wildcatter who really understands the oil market and has been all over this. And he was drilling wells yesterday. He told me, he said, no, we know that it's there. We're going to go get it. And as long as I can borrow the money, it's okay. But when we were talking about how many people are being laid off in the Permian and in all the oil, those are significant jobs, high-paying, jobs, hourly high-paying jobs. These truckers who truck the stuff out of there make 6 figures. When these jobs start disappearing, tell me what the average hourly earnings are going to look like. You tell me, because I have no idea. And when do they hit that panic button? Because that's coming.
Well, the other thing too, Ira, is that, I was talking to Robert this morning, and their company's already cut off all tech infrastructure from SAP, Microsoft, all those companies. They're not upgrading everything. That whole cycle's off the table for a couple of years. They're going to live with what they have.
Everybody's realized it's good to have some cash laying around rather than doing stock buybacks and throwing dividends to keep your stock price up. You know what? There's going to be a reassessment about some of these business practices because, again, when times are good, nobody gives a crap. You can't, and I'm the classic case. And people say, oh, you're doom and gloom. I'm not doom and gloom, guy. I'll be the first to tell you, let's buy this, let's buy that. It's the last thing. But I'm a realist. I have to look around the world and go, what is going on here? What is going on here? And if you tell me on Monday that Putin and Trump had a discussion and they didn't discuss the sanctions, I don't care what the media says, the 2 people in the world who view themselves as the most significant deal makers, they talked about the price of oil. What? Tell me what you talked about. Believe me, there was far more to that discussion. If not, why would you even tell me that you had a discussion? What's the difference on the price of oil? Either you can control it unless Russia was going to cut fairly dramatically. But I'm not sure what fairly dramatically even means now that you have a demand shock. And look at your own selves. My driving is so, what do I drive? Maybe 5 miles a week?
Yeah, I don't drive.
Yeah. Maybe, because I have to, I may have to go to the bank or I have to go get some supplies. But I'm not driving. I'm not going anywhere. I'm trying to spend money to help people. I can't even spend money.
Yeah.
There's nobody moving. So you tell me, I have to know where we're going forward. And the answer is, not to keep throwing money at everything because, I know. And euro is making lows. The euro is struggling. The euro was actually looking pretty good. But you look at it on all the crosses, euro yen's broken down. So just, you are seeing the negative view because right now it's an unknown in Europe. they know that it's coming to a head. All you do is have to look at the amount of articles. You got from the Irish Times, the Financial Times, the Times. Everybody is now writing about it. Okay, we're in. You can't escape this. Now, I think part of the metals fall off is that people get into that mindset about deflation and go, oh, it's going, again, I have a view on that, maybe different than the mainstream, but if you're selling the metals because you fear some deflationary spiral, you truly don't understand the role of central banks in today's world, and you're not paying attention to what you're seeing. Yes, I know there's also liquidation. I think yesterday's sell-off in the gold was the one area where people had some profits, and they were able to take some profits for the quarter end. Because let's face it, unless you're really a trading operation, it hasn't been a very good quarter for you.
Yeah, and there's a big disconnect between the physical and the futures.
Yeah, which we're all trying to understand. I can't really speak to it, but we're all trying to comprehend what that means. What's going on out there? I'm talking about as a trader. Forget about any other role I have in this world.
You and I saw it when Sinclair was the only one that could get gold in '80.
Yeah. Well, listen, when there's run on coins, there's run on coins. And you know what? The scarier thing to me about this is why are these funds sleeping? This is where I'm telling you, if I had a $10 billion fund right now, I'd be wreaking havoc in these markets because I could. And I don't care. You want to go to 100% margin? Fine. I can still wreak the same havoc. Not as much, but go ahead. You're telling me, therefore, that there's a shortage in the system. And I'm going to put a call out for the shortage. I'm kind of surprised that silver hasn't gotten a bid because, you know what? You're going to have to start looking at what you can own. If you think there's a shortage of gold, cash, then you better start moving down the line. And the platinum's interesting because we know that the Asians buy platinum for precious metals value, and they haven't really been here yet. So platinum is, to me, a critical metal because if it starts going up, regardless of palladium, I don't know who's buying palladium because if you're not building any cars, what the hell do you need palladium for? But on the platinum front, that will be an interesting barometer to me because if it really were to start moving up with everything else that's going on, and we know what the automobile business is, it would tell me that the Asians were in now seeking, and I'm not seeing that. The lack of bid in platinum tells me the Asians have not joined the party for alternative assets to fiat currency. So we'll see. But I'm being very patient, and I always warn patience. Now is the time to be extraordinarily patient. And for those who are running to the end, that tells me, because now year end is over in Japan. They have a March 31st year end for their balance sheets. And so I was kind of surprised to see the end, but I'm watching it because they're doing everything they can to pump their system up. And I'm surprised if the Japanese are actually bringing money home because the whole world is a miss. Yeah, so you start out the year bringing money home. I don't know, but look at the euro yen. All these things have collapsed. People are afraid of the euro right now. Truly afraid of the euro because they can't make a damn decision. And you know what? Okay, if the Germans are going to leave. Then let the world get together and figure out what they're going to do because it's not going to be pretty for the world. There's nothing pretty that's going to take place.
All right, guys, there you have it. Keep your trading shoes on, level to level. Don't trade in between.
Yep. Absolutely. And we'll just,
Thanks,
you know, you look at
Ira. This is Pete. I wanted to say that, we see a crisis in the oil energy industry, which is a bad economic predictor. We have what I consider we're going into really bad policy in terms of dealing with the virus. We're just throwing the economy down the toilet without looking at other ways of addressing the issue. And now you're bringing up I can see how the crisis in the euro is going to happen. Yeah, that's like that is like one of the most likely outcomes here, and it blows back. It very much affects everybody.
Oh, you know, Pete, again, because those bank balance sheets are bloated, and it's a zero risk weighting, so it's been in their interest to buy all the sovereign debt they can.
Yeah.
But you know, you have Italian yields. It's been sitting down here at 1.5%, 1%. People own those now. If they raised up to where they were in 2012, and I'm being kind, at 7%, you tell me that these are taken. You think you saw liquidation in the U.S.? You ain't seen nothing yet.
Who's backstopping, the Club Med debt? You know, who is it really? You know?
Well, we know who it is, but if they said no to it, then who becomes? Because then who cares if the ECB's buying? What's the ECB buying with?
Yeah.
And you know what? You have to give Lagarde credit because she's pushing this hard. She pushes and then she backs off and lets others take the go to the front, and then she shows up again. Interesting here. I'm paying very close. I've got 3 blogs written about this. I've just been kind of I don't want to write angry because that's never good, and I just look at it and go, no, because to me it's so, somebody has to call this out. Somebody has to call this out. And, and CNBC can't do it because, God forbid, there should be really somebody negative outside when the market's down, and they need to pull somebody out who's going to explain to you why the market's down with a negative opinion. And then when it's up, this is lingering and hanging over the market. Oh, let's see. Just for the record. Oh, Deutsche Bank is down at $6. Even my beloved UBS can't get out of its way. Again, what do you want? What do you need to see? And I don't want to hear about the next toilet paper roll. I'll tell you what the toilet paper roll is. It's called a euro without the Germans. Well, listen. Yeah. That's the world in which we live in.
So now, here's Northern Ireland making a good observation. He says too much of the PIGS countries have non-tax paying tourist industry. Northern Europeans pay more tax. So doesn't pay taxes.
Well, and then here I'll give you the last thing.
Tourist industry is dead, by the way. That's a bad indicator for those economies.
They had yesterday's FT had an interview where they had a discussion with. They reported on Klaus Regling, who's the head of the European Stability Mechanism. And, they're asking him about, and he's opposed to the creation of the Eurobond, of course. He's been given his marching orders. And he says last week, the article says, last week a group of 9 EMU members, including France, Italy, Spain, called on fellow governments to jointly work on a common debt instrument. However, the proposal foundered in European Council. Mr. Regling indicated it would be impossible to set up a brand new European institution to sell common bonds if there were political agreement. But such a project would be complex and time consuming. Oh, really? You think that's the issue, you asshole? It would take 1, 2, or 3 years, he says, and member states have to come up with capital or guarantees or assign future revenue. And then he makes this is a quote. One cannot create bonds out of nothing. The audacity of that statement is beyond anything I can imagine. They've created bonds out of nothing every day of their freaking life. So when Draghi was building up the ECB balance sheet, you were really synthetically creating bonds out of nothing. So admit it and go forward. That's the real heinous point, and that's what people are waking up to. somebody make a decision.
Yeah, well, they'll make a decision after the fact, and then it'll be too late. That's how they always do it.
All right. I got to jump off, but I'll talk to you. That's it.
All right, Ira, thanks.
All right. Okay.